GM, welcome to Morning Markets. It is Friday, the 17th of October, and I have an emergency video for you all. I just got a signal which has previously been a big danger signal for the markets flashing this morning. So, the VIX. Now, what is the VIX? It's the volatility index for the stock market. When this rises, it shows there's uncertainty in the markets. And when this falls, it shows that there's certainty in the markets. So markets, of course, don't like uncertainty. They want the periods of certainty where they can just slowly grind higher and not have to worry about anything breaking in the world or anything macro that might be unraveling. So you'll notice these red columns here. Look, when the VIX spikes above my danger level at 23.86, got above it here, had a big spike. That led to what was the bottom in the summer of 2024. That was the Japanese yen carry trade fears. Bitcoin bottomed at around 49K. You also had a brief spike above the danger level here. That led to Bitcoin having a dump from 107 all the way down to 91K. So big move. Again, got briefly above the danger level here. That led to the penultimate flush down before the proper bottom where we had a big spike above the VIX danger level. Bitcoin bottomed out at 74K. Of course, the stock market actually had a much bigger crash, and the VIX is a volatility index for the stock market. However, we know risk assets are correlated, so often stock market flushes can lead to crypto flushes and vice versa. It's just a matter of what is stronger and what is weaker. So now we're getting that same signal flashing over here. So warning signs are there. And the main reason warning signs are there is because Bitcoin is actually breaking below its range low level. And this is exactly as I've spoken with you guys. So if we look at Bitcoin here, this was my trade of the week that I shared with you guys on Sunday night. You will see here on the weekly outlook video posted 4 days ago. I gave you these paths, and the red path I said look for a high volume break of the high time frame support resistance. That will give you momentum shorts. And then from there, you're looking at the range low. Does it hold or does it break? Who else is out here, guys, giving you trading setups on Sunday night that play out on Thursday and Friday? I don't see anyone else doing that. So please drop a subscribe, drop a like on this video, drop a comment. Let me know if you've been catching some beautiful trades with me, because damn, this short could be a big winner if we can stay below 107.2. So I took it on the 15-minute time frame. Once we got that break below, we had volume over here. So look at that. Got a very high volume break. So matched with what I was looking for on trade of the week. That has played out, and we've recently hit that range low at 107.2K. VIX signal is flashing, and red path seems to be playing out so far to the absolute T. The magic squiggle that I gave you guys on Sunday night has dictated the market direction. And of course, smart money watch my videos, so they buy and sell based on my lines. And now we just need to see, does it follow the red or does it follow the orange? In the case that it follows the orange, so got to look at all paths, be objective. If we do reclaim the high time frame SR, that should set up a nice long to take out some shorts that will have built up in this downtrend, because that means the sellers are actually exhausted if we start to reclaim levels. So I also have this long in mind where if we set a trap below 107.2K and start reclaiming these levels, well, that can set up some momentum on the bull side as shorts have to unwind rapidly. So keep in mind, got an idea for a long there if this setup does fail. But at the moment, go to 15-minute chart while we're below 107.2K. Volume's high, so watching volume. Ideally want to see volume keep increasing while I'm in this short, because if volume keeps increasing, then that means sellers are coming in at the market in greater and greater size as it falls. So that is harmony. So you'd want to see this volume candle just come up like this so that you can see volume rising the whole way down. That would be the ideal scenario. Now, of course, volume is falling here, but let's see what happens. You can also look at your hourly chart for the volume. Again, big volume break of the high time frame SR, exactly what I wanted. Now we just want to see volume start to increase as we break down. Otherwise, you get a divergence, and that can potentially mean sellers are actually not willing to sell here, which can, as I said, set up the trap scenario and some reclaims of levels. So watching to see sellers show up with more power, because that literally means there's more people selling and selling with bigger size as the market goes down. And that's the sign of harmony, which leads to continuation in the trend, which is down. So to give you guys a bit of a cleaner view of that chart. So shared this with you guys yesterday. Breaking high time frame SR, that of course was our primary support. We lost it. Range low was the last level to lose. It's the level I've been sharing with you guys. I said no daily closes below that range low. So also watching the daily very carefully now. Do we see Bitcoin lose this on a candle close, or do we manage to recover today? Because closing below there on the daily really sets up for this chart to confirm everything since July. So anyone who's bought Bitcoin since July is underwater, and therefore this is distribution playing out. And now we're in the markdown phase of the Wyckoff distribution. That is phase E. So be very carefully watching the daily close today in 16 hours time to see, do we confirm the breakdown of this range, or do we manage to set some sort of false breakout trap like we did over here to the flip side, and then actually lead to some sort of reclaim of the range. That is what I'm carefully watching, and to give a clean view of the short. So it's on the 15-minute. I'm playing the momentum. If we start reclaiming the range low, potentially I'll look for exits on the 1 hour, but otherwise looking to play this for potential flush lower. And what are the levels lower? So where can we look for on Bitcoin to see potential reactions at? Well, of course, we've got the liquidation wick. That is at 101.5K on Binance, but you got to look at all charts. You've got 105K on Coinbase, which lines up with the July low. So the July low has not been hit, barring the liquidation wick, and on some exchanges it won't have been hit at all, like Coinbase. So that's what I'll be looking at as potential targets to see reactions here, or maybe trim some profits, hitting that liquidity. Of course, we got Binance Perps liquidity at 101. And then we've got that all-important summer low, guys. If you remember, it's a level I've been sharing over and over. And I'm going to dive into the high time frame charts, how I'm going to be playing this cycle and the next in the weekly outlook video on Sunday. Make sure you stay tuned for that. That would be a level which really definitely shows we're heading into some sort of bear market, because we never lost the summer low in any bull market year until the bear market starts. So you've got this summer low here. You've got this summer low over here. This was 2022, bear market year, and this is the fourth year. So the equivalent year of where we are at now, where we set the summer low over here. And then once you take that summer low, of course, you're heading into what is potentially even the final capitulation. So summer lows tend to hold. Be watching that as the last level, but in between there, we've got the July low, and we've got, of course, the liquidation wick. So shorts are printing right now. GM to anyone who caught this with me. Now, in yesterday's video, we literally nailed it. I told you guys, look for a reclaim of 111.6K, because if we can't reclaim that level, we're likely to reverse. That was your intraday level that I messaged you guys in this video. Again, 135 views, crazy when I'm calling the market to the T. Look how beautifully that held as resistance over here. Wow. Couldn't get above it, led to a flush. And I told you guys in the video, if we've tested the high time frame SR once, twice, multiple times, it's more likely to break. That's why I didn't give you guys a reversal path here. I said we're probably going to head towards that range low. And that's exactly what's happened. We headed towards that range low and now we're breaking down from it. So Bitcoin, again, from the video, you're seeing the 4-hour, 12 and 21 bands hold. That confirmed over here. We tried to reverse. Reversal failed. Now we're breaking down, and I'll be watching on any retest of the H4, 12 and 21 bands as a potential re-entry to get in. If you aren't in shorts, you want to track these bands as they go down. And though those bands should hold as resistance throughout, if this is going to be a strong runaway downtrend, and price should just keep going, come into them, and then find resistance for lower. That's how those bands tend to be respected, as you can see over here, and over here. Been mentioning those bands to you guys all week. So on the 1 hour, if this is going to just be a runaway trend, then potentially you can see the H1 bands actually holding as resistance. So what you got over here is a strong fast trend at the moment, seeing H1, 12 and 21 bands actually being your trend resistance here to the downside. So again, if this trend is going to have momentum and be a fast trend, it looks like it is because we're getting these high volume impulse candles on the H1. See these big red candles, that means high volume and full bodied candles with large volatility. Any retest into them could play out as the fast trend. If that fails, then you look at the H4. So H1 bands have been red pretty much throughout. Since they crossed over here, what a signal that was. I remember we was taking shorts right over here. I missed it overnight, but a few of you guys sent me it. Breaking that Q4 open was the first signal, but H1 bands have been red ever since. There's been no reason to look for longs yet. Couldn't reclaim any intraday levels, so now we're watching this chart play out and seeing where it can go to. Potentially that July low is the first target. Then we're looking at filling in the perpetual futures wick, and then below there, the summer low. So I'll be trimming profits consecutively at these areas, especially if I see signs of reversals, then potentially exiting all of the shorts. So that's what I'm looking at on BTC. Again, higher time frame update coming on Sunday night. And when we look at the higher time frame, what are we seeing? Well, zoom out to the weekly. You guys will know this beautiful chart over here. Support resistance all cycle has been playing out. We flip it, hold a support, push up. Flip the level, hold a support, push up. Flip the level, hold a support, push up. And we tried to flip this level and hold it as support. We pushed up, found resistance. So this was the change of character. Change of character. This is why I sold all my Bitcoin and didn't get back in the market with my cycle bags. If you want more on that, again, watch the weekly outlook video. I'll pin it in the comments. That was your first sign of weakness this cycle. Now we're breaking below the support. So not only have we failed to break above this level, which we previously don't fail to break above. We usually have one test and then clean through. We've had one test here and now we're breaking down. So we've never broken down below one of these green lines before this cycle. This is a change of character, something we've not seen, but it's no surprise. We had the signs of euphoria. So this is the real high time frame trend shift, which we haven't seen before. People go back at last cycle, and if this is all the chart you see, you'd be pretty bullish sentiment rise, right? Charts have gone up, they come down, they come back up to the highs. You'd be pretty hopeful. At least everyone was. Everyone was calling for 100K here, but what did you have? You had the low, which led to the recent high, get broken. What is this? This is the market structure break, guys, that I'm always telling you about. Weekly market structure got you out of Bitcoin from the top to the close, 15% below the Pico top. MSB then led to what we know as the 2022 bear market, which of course went down around 73% from the MSB. So now you do have an MSB which would form here. So this is a low which led to the high, closing below this level. And really we can call it just this general zone green line to over here would be an MSB on the weekly. We've got 2 days left to go, but now you're looking at potential extended downside on BTC. Again, I don't think we see a 2022 style bear market because we went up super aggressively. So you go down just as aggressively when you do that, because what is this? This is all just a bunch of gaps, and gaps get filled. Simple. You had literally 1 3-week consolidation in this bull market before higher. Whereas this bull market, very, very different, guys. We've got institutions coming in. It's not led by crime with institutions like FTX, 3 Arrows Capital. They're not the ones propping up the market. It is your big players who have been around before Bitcoin was around. They're not using leverage in degen ways. It's not crime. They're more controlled. Therefore, we don't have the conditions for something like 2022. Look at these beautiful consolidation markup throughout this entire cycle. It's been much more efficient. Now here we started to see the consolidations actually fail, turn into distribution. Of course, you would know that because we got the sweep over here, much like we've got recently. The sweep after sweep after sweep. You saw this, guys, live with me. I've been talking about this over and over. So these are your beautiful accumulations. And in red, you have your distributions, which eventually flipped into accumulation as the market went on. But that was the telltale sign that we're getting later and later. Now, smart money are starting to actually use retail as exit liquidity. Here, they don't use it as exit liquidity. Look, there's no sweeps. No one's looking to take all the stops. They're looking to let the stops build up and run it through. Whereas here, they do sweep. They're looking to take the stops, fill the exit liquidity, get the breakout buyers excited to dump on them. They don't do that here. Actually ride the momentum with the breakout buyers. So that was your first sign. Then had a reaccumulation, then come up again. And now this looks like it could confirm as distribution today if we close below this green line. If the weekly closes below the MSB, and that's confirmed. But of course, we've known this for time. This is again why I sold my Bitcoin at 121K. Been 100% cash, feeling great, ready to absolutely crush the rest of this cycle. And that's a message for all of you. You shouldn't be fearful or panicking right now. We may just get the next best generational wealth opportunity trades coming in the next 3 to 6 to 12 months. So better be prepared. You better continue watching my videos. I'm going to give you guys the bottoms. I'm going to give you guys the tops, just as I have been all cycle. Bottom over here, I called it. Top over here, I called it. Sold all my Bitcoin at the Pico top over here. Been calling it with you guys. Of course, I've been around since 2023, accumulating throughout this entire rally. It's never a bad time to take profits, and it's never a crime to take profits. So don't get fearful. Don't get mad at the charts. There could be generational opportunities coming, and maybe that comes back to this accumulation level. More on that in the weekly outlook video Sunday. I'm going to give you guys my full plan for this cycle, whatever's left of it, and the next cycle to make that generational wealth. But overall, you're seeing those high time frame signs start to creep in now. Weekly 50 EMA has been your bull market support. That's the last level Bitcoin can really hold and can actually offer some really nice scalps around it to the long side if we do start making our way to that level. If you lose it and reclaim, much like this setup here on the low time frames, can offer something good, but make sure to check out my analysis for live updates on that. If the 50-week doesn't hold, then we're just looking at those higher time frame bands, 100-week, 200-week. So that's Bitcoin. Starting to see the low time frames, the bearish signals in the low time frames leading into the high time frames. And you know, guys, low time frame is your faster signal. High time frames, your slower signal, but more reliable. So low time frames, they lead into high time frames. And this is the state of the Bitcoin chart. Watching the weekly close carefully for a potential market structure break, just like we had over here. So this is the real deal, guys. I give you guys the real charts, tell you guys what I'm doing with my portfolio. I sold at what looks to be the top for now and potentially the top for the cycle. Again, drop a subscribe, turn that bell on. You can't afford to miss these videos. The algorithm shows you guys a bunch of crap on YouTube that gives you the wrong advice and quite literally leads you to losing money. When I started out as a trader, I also made the same mistake, following crappy YouTubers, shilling random coins which they don't even know what they do. I fell for it too. Don't have to kick yourself for it, but now you know. Now you know the kind of traders you need to follow. People who really trade full time. So please drop some love in the chats if you've been enjoying these videos, because I've been mentioning to you guys the Bitcoin weakness forever now. I showed you this chart, the breakdown level on the crypto crash. Bitcoin was weaker than Ethereum, still is weaker than Ethereum, was weaker than stocks, weaker than gold. Of course, gold is chatting, and we know when gold starts pumping and going parabolic, it's actually bad for Bitcoin. Mentioned this in yesterday's video. Also, been mentioning it in all my analysis. So, told you that Bitcoin underperformance against ETH, stocks, and gold is a sign of weakness and typically points to lower. Back when we was at 111, all the signs were there, guys. Now we're breaking down. It's no surprise. This is just what Bitcoin does. And as I said, you have to look at where smart money capital is flowing, or where a lack of it is flowing. And there was clearly a lack of it flowing into BTC. That was the telltale sign that Bitcoin's going to have a more aggressive move down. And this is exactly what we're getting. And on the wider crypto market, you've got those high time frame SR levels, which we're now losing. Very simple. This is why you're seeing the breakdown, guys. I've mentioned this in my video yesterday, in my videos all week, and now we're seeing that play out. So you tend to fill in these wicks, these big liquidations, as I said. Now you're seeing that fill in. So let's zoom into the altcoins. What are we seeing? Well, Ethereum breaking below this support zone, which it has to hold. And it is so far not holding. Below here, you risk breaking down further and filling in some of this wick. If we go to even higher time frames on Ethereum, you have this weekly order block. So let's go to the Coinbase chart. You got this weekly order block, which hasn't been able to produce a new high. We're now trading into it, which is potentially a sign of weakness. And on Ethereum, you actually have this yearly open level, which might be a key level to keep an eye on here. If we do make our way back down, I'd be watching this level carefully, because above there is your last chance to form some sort of consolidation. Of course, this is bearish. This is a downtrend, guys. You know that. But if we reach that level, potentially you can build some reaccumulation base. Whereas below that level, you're looking at filling in some of these bull market gaps. So I'll be careful when it comes to Ethereum around this yearly open level. That's the level you have to hold. Below it, you of course also lose the weekly order block, and then you've got this big gap over here. Bunch of really fair value gaps, we can call it, between here, which is likely to then fill in, as everyone who bought Ethereum on January the 1st is underwater, and that leads to reflexive selling. But it's been very obvious in the charts what's happening. Got high time frame support resistance here, falling below it. So we go back to that Ethereum chart. Super simple. You got this is now interim resistance, so you can remove these bubbles over here. Primary support got lost. High time frame SR got above it, now we're below it. So this is a fake out and a big high time frame fake out. And of course, the biggest sign was being unable to get above all-time high and hold. Again, we had a wick above, couldn't even close a candle above that previous all-time high. Sellers sold. They used that liquidity as exit liquidity instead of allowing breakout buyers to mark it up. And smart money are now dumping. Now you're seeing the follow through. Now you're seeing the distribution as we get below the high time frame SR. So it's no surprise on ETH to see it breaking down here. We got a beautiful sweep to begin with from yesterday's video, but that sweep got sold into. Again, we get something like the EMA bands up to see where are sellers selling in this downtrend. And it's been at the H1, 12, and 21 bands. Found resistance there, led to a flush down. Now we're losing the range low. Below this range low, opens up for potential move to this liquidity at 3640. So ETH, while it's stronger than Bitcoin, it is still going to be dragged down by the market. It is still losing levels. H1 bands are still resistance, so expect that to continue. Simple as that. When we look at total 3, I mapped out 2 paths for you yesterday. You really want to see from here, can total 3 hold up in this range, I said? Or do we head into November trading lower than where we were at in October? If so, that means after the liquidation, smart money decided to sell on the bounce. And that's what you're getting so far, this red path where smart money are deciding to sell on the bounce, licking their wounds, exiting the market, and we are now trading lower than where we are at in October. So Q4 rally potentially not on the table, because as we're heading into Q4, the markets are getting weaker and weaker and weaker. Unlike the green path, where you actually build a base, which can be setting up for an end of year rally. So I'll be watching this daily close today. Do we close below this current October low over here and start accepting value below this consolidation, or can we reclaim it and build value between 690 billion and 800 billion? So looking at the stock market, this of course is where the volatility is coming. So we're getting something like the orange path here. We are breaking down on the futures market. Of course, the cash session hasn't started yet, so we're seeing the danger levels get spiked pre-New York session, which is interesting. Also happened last time when I called the big stock market crash over here. So this was when the VIX was spiking above the danger level. Got that big tariff drama. Interesting to see if this chart breaks down in the New York session. This only opens on the New York Open. This, of course, is the futures chart, so it's live right now. And really, you've got this daily low that I mentioned. Break this daily low, and you're likely confirming an extended period of downside on the stock market, which you would be risk off. Because previously, we have a dump, leads to new high. We have a dump, leads to new high. Have a dump, leads to new high. Again, dump, leads to new high. It's only when you have a dump, start to bounce, but fail to make a new high, and then break below that dump, that's when you start getting into a bearish shift, just as we did over here. So you're watching this carefully. Bands are potentially flipping red now too on the 12 and 21 EMAs. If we break below 6540, you're looking at extended downside on stocks, and for this to be a potential top over here. So you've got this consolidation, which broke down. As I mentioned to you guys, we traded this live. I told you the break of this box is going to dictate the next move, and we broke down. That is now a trap. This is now underwater buyers. So what happens? Everyone wants to look at the news and the headlines, but what happens when you just look at the charts? Price comes right back to the level where those trap buyers are, and those trap buyers sell. And when they sell, that means distribution, and that leads to lower. Super simple. Markets can be that simple if you let it. You don't have to get caught up in the manipulation and the whales and the headlines, because does that help you make money? Yes or no? Often the answer is no. So don't focus on things that don't help you make money. They can help by all means, and they can give you context, but allowing it to make you freeze up in the markets and panic and an excuse for losing money is just cope, because charts play out beautifully. Trap was set, broke down, bounced right into the trap where underwater buyers are, and that's where you sell off from. Simple. And that becomes the level to reclaim. Reclaim this trap level over here, and then stocks are back on for new all-time highs. It's as simple as that, because you put these underwater buyers back in profit. So get above there. Now you're looking at, okay, this chart is bullish. But while below it, you're watching the daily low, break below 6540, looking for extended downside on stocks. So gold, of course, has continued higher, continued chatting. Looking at gold on the 4-hour, it's again breaking away from its H4 12 and 21 trend. The 1-hour trend, as I mentioned to you guys, is holding. Broke out from this box. It's led to continuation higher. Beautiful trend trading on gold. Now seeing some volatility show up. So are these bands going to continue holding, or are we actually going to have to go to something like the 4-hour? If they don't hold, that could be support. And if that doesn't hold, then you're looking at something like the daily. But as you guys know, we're getting into parabolic territory here. We're overextended past the daily 12 and 21 bands, which typically happens. Look, overextended above these bands right before some sort of break, consolidation, or even downtrend. So be watching carefully on gold. Do we start to retrace any of these previous day lows? Once we start doing that, that's when you look at, okay, we're probably going to consolidate or have to digest this move. But at the moment, 1 hour trend is parabolic and playing out beautifully. So yeah, beautiful chart since we broke out from this box. 1 hour trend is active. If that breaks, you look at the 4 hour trend, and that has untested bands over here for quite some time now. That breaks, you look at the 12-hour trend, which I know a few of you have took from my videos. These green arrows here, beautiful long setups on the 12-hour. And if that breaks, you then look at the daily. So this is your daily market structure over here, your daily order block. I think if there are any pullbacks on gold, it later on comes back to this zone. So that's the full markets wrapped up, guys. Remember, manage risk. Stay with me. Beautiful generational trades can come. Dollar breaking down. Interesting levels here around 100. Do we continue lower? Which should be risk on, but of course markets are never that binary. Break above 99, this range low, then we're looking at further risk off moves. Turn that bell on, guys. Hit subscribe. If you enjoy these big emergency updates, I'll see you guys in the next one. And Weekly Outlook Sunday is going to be a banger. Make sure you watch that video. GM.